Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Relaxo footwears, which at current levels looks like it is expensive, but in the current market scenario when everything is falling left, right and center, if this comes down a lot, whether you should buy or not. So let's understand that and let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about Relaxo Footwears, but before I talk about the company, I want to just make a request to all of you that kindly support me through Patreon, and even a $2 support, that's 140 rupees a month, would go a great deal in helping me promote the channel even further and bring in more research videos with detailed analysis and SWOT analysis of companies, as well as you'll get a lot of articles on Patreon that I have written about stocks and markets and where the market is headed, etc., and what you can buy at current market level or in decline. What are the different stocks that you'll be able to buy in which you can make 100 200 times profit whenever this market meltdown ends. So kindly go to Patreon, look at the channel, join any tier, and that will help me grow. That will help all of you grow as well along with me in terms of an investment community. Thank you. Now about Relaxo Footwears. It was established in 1976 and it is one of the biggest retail brand, and it manufactures top quality footwear products, and their major brand includes Flight, Sparks and the Bahamas. They have also got export operations to multiple locations, and because of them exporting at least 20 to 25% of their business, the stock could be under pressure in the next couple of quarters because of what we are seeing across Europe and US with the shutdown of economy virtually to a halt because of the coronavirus scare. If you look at the financials of the company in this Q3 versus last year's, the sales went up by around 9.5%, but the profit growth has been exceptional at 57%. The debt has come down a lot, and it is a nearly a debt-free company. And the lower tax regime of the Indian government has also helped the stock put in a very good performance on the bottom line. So a growth of 50 odd percent doesn't come like just like that, and this was operationally pretty good. Return on equity is around 18.5%, which has grown over the years from around 10 12% 4 5 years ago, and the operating profit margin at 15% is pretty decent. I won't say it is extraordinary looking at other consumption companies, but in the footwear and leather industry 15% is quite good, quite solid. In terms of the stock performance, the stock has gone up nearly 1.5 times in the last 1.5 years. There was a lot of valuation gap in terms of what Bata was trading at compared to Relaxo, and this gap got filled over the last 1.5 years, and that's why the stock movement took place. Although the results have also been pretty good in the last 2 3 quarters. The market cap of the company currently is around 16,000 crore, 16 and a half thousand crore. The return ratios looks average compared to other consumption companies, but as I explained, in terms of being a company in the footwear and leather industry, the return ratios is quite good. Bottom line growth has been exceptional, and we have seen a 57% growth year on year during this quarter, which is pretty good considering the kind of business environment we are in, considering the kind of economy that India is going through, and the fact that the number one player in this business has a very big market share. Yet Relaxo is doing really well, which means it could be gaining market share on the number one player, that is Bata. So one has to look at it on the broader perspective, that the results cannot be so sharply, you can say, deviant from the largest player and so sharply good than the largest player unless it is gaining more market share. I mean, I'm talking about Relaxo gaining more market share. Uh, correcting sharply in the current fall, and this is a great opportunity, I would say. If it goes to another 10-15% fall from the current level, which could happen in the next few days, those will be very attractive levels to get into Relaxo. When I look at the valuations and assess the valuations of the company, currently it is trading at around 71, 72 times. When I made this video or made the presentation, it was trading at around 76 times. Uh, in, in, in my opinion, the bear case scenario for Relaxo is 36 times. So it is nearly double to what it should be. In November 2016, during demonetization period, Relaxo went to as low as being 36 times earnings. I cannot accept or expect, we cannot expect Relaxo to trade at around 35, 36 times again, although because of the scare of the illness and the virus, everything is falling down 8-10% every day. So there could be a situation where Relaxo might trade at around 40 or sub 40 times levels. In my case, when I analyze the stock, I took a reasonable level of 44 times. Currently it is at 71 times. At 44 times earnings, should be around 550, and I'm talking of FY21 earnings, so I'm expecting a 30% growth in earnings, so that would be 12 and a half rupees, and at around 44 times it would be trading at something like 550ish or so one has to take that into account, that Relaxo would come in with 12 and a half rupees EPS, but because of this virus and because of lesser people going to public places, we could see this EPS being tested or dented. So we could have an EPS of 11 and a half rupees, and in that case I would suggest you even buying the stock at around 440, 460 level. So if this goes to 550, start buying and buy till around 400, 440, and probably you'll make a lot of money later on. Currently it is extremely expensive even now with the correction, and correction is due in the stock. It was due and it happened. Probably another 15% fall is expected minimum. We could see that this week, or probably not this week, but in a week or 10 days, for the stock to go to around 500, 550 levels, and that those would be very good levels to get into Relaxo footwears. If you look at the technicals of the stock, then it is currently trading at 71 times, probably you could say 71 to 75 times. It also trades at around 7 times sales. Already has run up 1.5 times from the lows, and can correct easily 10% easily from here. We could see even 15-20% correction from here. The 100-day exponential moving average is at 650 currently. It is around that, while the 200-day moving average is at around 565. So in my opinion, 565 is coming very quickly, and it could be breached, and that is where you start nibbling into the stock, and then you buy it till it goes to 440, 450. It can even go there if the market doesn't stop here. So what needs to be done? Avoid at these levels and wait for at least the 100 EMA to be breached, which it has today, and probably wait for it to go at least 100 to 150 rupees lower. So 15 to 20% decline even from here. With the kind of environment we are in terms of the stock market, we could easily see another 20% slashed out of Relaxo, and that would be very attractive levels to get into. That would be around you would say it would be around 520, 510. So 510 to 520 would be good levels to get into, and it is a top long-term buy, and you can buy it along with Bata. If you have bought Bata, you can buy this one as well. So this was my video on Relaxo Footwears. Please like and subscribe my channel, hit the bell icon so that you can get my video straight away when I post it. Thanks a lot for watching.